Welcome to the Twomey Stock Market Report. Today is Monday. The markets have just closed January 23rd. So what are we going to do? Well, we want to give you a quick market recap and give you a couple of ideas and a little bit of interpretation as the market did rebound today. All right, so we're going to get right to it. And of course, if you want to get the latest and greatest Twomey Market Weekly Report, just go to the number 2 mestocks.com. There you'll see the newsletter tab right there where my cursor is. Click on it and you'll be able to pull down the weekly report as well as some trading tips. So there, and that's a very exhaustive 22-page report that goes into quite detail, both fundamentally and technically. It's a great learning tool that you could read throughout the week. All right, great. Let's get right to it. What do I want to talk about? I'm going to go first to the SPY. Let me make this this is the daily chart, right? Two things stick out. We've had our buy signal. The SPY was bumping up against the upper Twomey trend track line. Again, the stock market doesn't know anything about our trend line, but if you look back, I'm going to be a little bit repetitive here is from the market report, but every time from 2022, any high that we hit, it basically hit this upper line, bounced down and hit a new low. And when every time and in this case, it didn't even go back up and hit the upper line and hit the low. It managed to make it up to the upper trend line in September or end of August. That was a good bear market rally that we saw. And what did it do? It came down and hit the new lower trend line. What was interesting this year, as it raced up towards the end of the year to hit that upper trend track line, it pulled back. It tried it one more time, a second attempt, pulled back, all because it's really tough at the end of 2022. At the end of the year, the last couple of weeks, there's not a lot of volume. It can be volatile, but it's hard to gauge. And then early into the season, it's hard to gauge. And there's a lot of reasons for that. We go into our past videos, so I won't go through it here, but a couple of things that we noticed. In the beginning of 2023, it started to rebound. It got up once again to the upper trend track line. In addition to that, this blue line is the 200 exponential moving average. Some people use moving averages. Exponential just puts a little more emphasis on the most recent data, so it's a little bit more in tune with what the current trend is versus if you look at 200 days, it just takes everything and divides it by 200 days. So with that said, again, every time Twomey trend track, here when it broke up, it went up to the Twomey trend track line and then repelled. Here, we did briefly break, went up to the Twomey and repelled. Same thing here, same thing here. And now we're redoing the same story. Up to the upper trend track line, up to the blue line, which is the 2 EMA. We hit it, sell off last week. We got a dramatic sell off. And here we are. Look at these volume bars down here. This is the volume. Big volume. Friday and today, we're up over again that Twomey trend track line, and we're eclipsing the 200. We're also narrowing the gap between the 50 and the 200. If the 50 could cross above that, they call it the golden cross. If the moving averages do, market will be on alert for higher prices. That's usually what that says. All right, so we're on the watch. We're not totally convinced. We've got some big earnings coming out this week. Microsoft tomorrow, Tesla, and Visa, along with 3M and Raytheon and Boeing and a few other big companies. But those are the kind of the bellwethers that everybody's got their eye on. Microsoft's going to be very interesting because they were offering layoffs, right? And they're basically a subscription software service firm now, amongst other things. But that's what I like about Microsoft. We've traded in and out of it. And we're going to go over that in our recommendation list. But the bottom line there, with layoffs, you think the company would be saying, hey, earnings don't look as well. We're overburdened with employees. Yeah, so it's going to be interesting tomorrow. There may be some reactive trading going on. There's been a lot of volume in that. We're going to go back to that in a story in a second, but I want to finish this. So what's going on with the SPY, which is our proxy for the S&P in this daily chart? Looks pretty good. It's bumped up. We had that brief sell-off, but it didn't hit the last lows, right? each high is being responding with lower lows on the pullback, and now we're back up against these numbers. So we need to get back and longer term break this upper barrier, if you will, this 200 and the red Twomey track line. So that's what I'm on the watch for. We are in it. We do have a mutual fund in it. We have some other holdings from the SPY or S&P. We're also looking at, a quick trigger figure. So, because every time it gets up here, it sells off. We have not taken a short position. Some recommending that. I have not. The RSI, 59.4, 65 and above, we start flashing warning signs that it's overbought. We're not quite there yet. So, should have a little bit more room to grow, and we got to get through some of these earnings. The stochastic is now, the green did finally cross back up to the red. It is in the 90, very healthy. The MACD is still positive. The green is still above the red. I know it's hidden by these volume bars, and the green is now a 2.05. As you look back here, look at all this MACD, how it was down, of course, the lows. This oscillator is a very slow-moving oscillator, so it's very good trend analysis. Once it breaks below the green, breaks below red, we pay attention. It's a good selling opportunity. And then you look down here, and of course, see how long it took. It took, from mid-August to all the way back into, mid-November to get back into positive territory, and then it hit negative again. And now it's taking a while to really get up there. So that's a good sign that it's starting to come back positive. So what am I saying here? We need to wait. We are long in certain areas. We're going to maintain those longs. We've got tight stops. We have to eclipse this quick down sell-off that these barriers, the 200 and the Twomey trend track line has portrayed. Now, I'm going to expand this. This is not my favorite. And now, you have to realize we've got another day's trading. But if you exclude today's trading, if you see here, this is not my favorite short-term trend or pattern. See how this the low, and then if you draw a line from the last high to the to the next previous lows and the next couple of ones, this downturn cone, it can be positive if you break above this upper cone red line and then eclipse that, you can now have a stronger push forward. And I'm going to show you a couple other charts where that is a question. So this is positive, but this little short-term downtrend and a bounce trying to get up above these areas, unless it breaks it substantially and stays above that, it negates that trend that typically can be negative, right? So I want to go to the diamonds, our proxy for the Dow Jones. That's been the strongest. It was also very weak, correct? And if we look here, we're getting close to a sell signal. Today, we've pretty much held ground, so it's not a sell signal. The RSI is 51, and we closed Friday at 48. So that's telling us when the RSI was way up here in the low 60s. That's abated. The pressure on the overbought situation is abated. That's pretty good. But if people are getting out of the Dow Jones and moving it over to the NASDAQ, that's an interesting story. Why would you, if you've been in the Dow and it's been pretty good, why would you sell decent positions unless you felt it was getting tired and then plow that into the NASDAQ? Or you needed to get cash, you're going to take it out of some of these things because the Dow Jones has been flat. But we need to see this, again, kind of break above this barrier here and get, continue with our buy. The MACD is, stochastics did turn positive today. The green is above the red and above 50. So that kind of tells us there could be a trend upward, short term, not long term. So we're watching that. And of course, this is what we talked about. The 50 did cross above the 200 EMA in my case. Some people use moving averages. Moving averages is also crossed above. And, it's gone sideways, but it's really held serve at this 200. Whereas the SPY, it's been the opposite. Every time we get near that 200, it acts as the opposite, repel. So if we can break and stay above that, like the Dow, that's good because there's obviously more S&P 500 versus the Dow 30, more stocks, more participating. So that's always positive sign. Okay. All right. What else did we want to cover? I want to go over a couple of things here. Recommendations. AMD got an upgrade today. That sector is starting to take off. Some things have really taken off quite a bit. The semiconductors. It's been beaten down, and let's take a real quick look at it. It did get a buy signal back on January 12th, and the sell-off, it came back down to the buy signal area. Now it's raced off. And of course, today's positive recommendation by analysts, it jumped up quite a bit, 6-7%. I don't want to jump into it just yet because it's going to eclipse the same problem, the 200 EMA, and this whole sector has been beaten down. I mean, most prevalent it was been the semiconductors, right, for all last year. So it's just like the SPY. It can't manage the 200 EMA, and it just blows off into another downturn and big sell-off. Here we do have some chance. So I'm telling folks, what I'm saying, you should around 71, 71.2. If it pulls back into that area in the next day or two, that's a good area to jump in. We've got a very positive MACD. It's just starting to move over zero, and it's upward slope. The stochastic's way up there, and that's 99. If we look at the weekly chart, it hasn't hit a buy signal yet, but it's very close to that. And again, that 200 EMA, look at that. It just can't seem to break that of late. See how before the 50 EMA was the barrier? Now it's the 200. And the 50 is racing down to the 200, and that would be a death cross, right? So there's that. Don't jump in it now. Wait for 71. The other one I want to look at is we were in Goodyear Tire, and that one, on the last week's sell-off, we did get stopped out with a very small. And here we are racing back up. See these 2 days downtime, it shook us out, and we got out. The buy signal, we were in back here. We took a small profit. This one, I would get back in, but I would wait till it gets down to 11.2. It's right, closed at 11.6 today, or at a high of 11.7, and the 9 EMA is 11.4. I would wait until around a pullback to 11.2. I would get in that. I would wait, and here's a good example of I was talking about this line, this trend line. I do not prefer. I'm going to change the color here, make it purple. And, this is, see if I can get a darker one. And then I'm going to draw it here. And this can be either very favorable or it could be very negative. And what it says, it's having a hard time getting higher highs, and it's making lower lows. Short term, very short term. Because we got our sell-off here. There's the low. It goes back up, doesn't just barely eclipses the last high. It makes the next low is lower, and then it goes up, and it's a lower high. See what that? So that's what this declining cone, if you will, is telling us. If it breaks up, that's why I say don't jump in here. If it breaks decisively above this purple line, we can get a nice run up, and this would be an extension that may be this extension here, which is a low of 9.7 and a high of 11.8. So you're talking about 2 points. And if we can get 2 points from this low here, which is 10.9, that's 12.9. And that would bring us back up to near the last high, which is 12.9. There you go. So keep an eye on that. If you can stay close, you could buy it at 11.3 or 11.4, but you got to have a really tight stop because it hasn't really decisively broke up. Now we may wake up tomorrow and it will run out of our bandwidth to buy, but that's something I want you to look at and keep an eye on. The other, we talked about Microsoft, so let's take a look at Microsoft. This is the daily chart, right? Before we go, let's get back to GT. Goodyear. It's a low price stock. We don't expect it to move too fast. It did get hit with the downturn, so we're looking at the bottom and a bounce, right? But if we look at the RSI on that, see that 59.8, we're pulled back when it was RSI is 67, 66. So the pressure of overbought has subsided a little bit. Microsoft. Everybody knows about Microsoft. Whoops, MSFT. So let's take a look at Microsoft. I'm running over here a little bit on our update, but it is flashing a buy signal. We haven't jumped in or alerted anyone yet on this. I'm going to wait because earnings are coming tomorrow. I really typically don't buy it right before earnings or right after them. So we're going to wait. And if it runs off and we miss it, so be it. And that one is still below where we sold when we previously held that. The volume is pretty good. The RSI is 54 or 55. So if we can get room to grow, the problem with if earnings come out, any company that's laying off people in the high tech sector, that people kind of initially say, oh, that's favorable. We should buy it because they're tightening the reins and it'll help their bottom line. Yes, but sometimes they don't lay off enough, or sometimes they lay off and it hurts their sales. But basically, they're telling the world that our costs are too high, our sales are not coming in line. We got to shed to kind of balance that. And what do? They shed assets, and in this case, the first easiest thing to shed is people. So that's why I'm not really. So where would you put your buy-in for that? I'd wait till tomorrow comes out. We'll send out an alert to subscribers. We'll probably talk this again before we jump in on that. Now, the other one is JP Morgan, which we held. We got shaken out. I got back in it because I'm still, bullish on this company. It's just barely getting near a sell signal. This is another one of those, and I'm going to draw a quick segment line. This is a little bit easier to define. Look at this. Downward trend, cone, right? Change it to purple. Again, this is a technical analysis, right? And, there's more to than just a technical picture. But if we kind of, we don't want to go from the bottom here, but that's typically I do go from the bottom. That is a short-term downward trend, right? So that it looks like, and it's been going pretty much sideways, right? So has not higher high, lower low, lower high, should be a lower low, right? So if it starts filling in this trend line, but if it breaks above that, we're off and running. And the 200 EMA is here, and that's held quite a bit since it broke above it way back here in November. So will it get down there? I'm betting. That's the wrong word in stock trading. The 50 EMA is really where I'm looking at as the next buy, which puts it at 133. I would actually even come in a little bit higher and look at 135, 134. Today's range, as a matter of fact, the low was 134.8. So I would come in at 133 to 134 range and take a position, and I would have a tight stop for way down here at 129 and see where it goes. So we're kind of recommending that one because of that sector, and we feel it's still bullish. So the financials, it got hit by the Goldman Sachs type thing, and we're getting other earnings versus financials this coming week. So that should help it, give it room to grow. So that's what we're talking about. Go to the TwomeyStocks.com. That's the number 2, MEstocks.com. Catch up on our newsletter. It's free. You can read it. Also, our weekly report is out there. So as far as trading, we had a very strong update today. We need follow through. We're going to go back to the SPY chart here. That's the one that's screaming, hey, tell me where the market's going from a technical perspective. We've got some very strong big companies earnings this week. A lot of them. So it should define where we're going to go in short term. We've got the Fed market coming in next week, early February, for the next rate increase. Everybody's predicting 0.25%, very benign. The TLT, which we're long, has been very, very slow to break above, and it's just barely near our first stop. We'll probably be raising those stops. But the SPY here, we're on the out. We got to break through this kind of cup here. If we do, it's off to the races. So if it doesn't, our stops will hold. So we did pretty good. We haven't got our mutual fund report yet, but the TLT, like I said, it's dropping. The 200% is, we broke zero plane there. We're negative there. Small caps that we held the last third is back up to 3.7. XLK, the Nasdaq's returned very nicely. We're up 4.3 on that, and we're holding all of that. And then the MGM, 5.3. We don't expect that to take off much more, but we're in that. And also the XLI, we're trying to hang on at least half that we have. That if the Dow does regain its footing, the industrial sector should take off as well. If it's not, we'll get out. It's near a sell signal, so we'll alert people on that one. EFA, the Latin America mutual fund, a lot of its materials, that's 3.3. Borg Warner, again, not a big mover, but something that we want to be stay strong at, and we're still in that at 5.9. XLB, the basic materials, that's one you want to add to if it drops a little bit tomorrow or the next day. And then the pipeline is starting to inch its way back up after a nice sell-off there. We're at 3.5. XLE 4.2. We hold all in both those. We joined CPG, Crescent Point Energy, a very low cost but high dividend, and that's holding at 6.2. We got in there end of last week. The Latin America iShares, another very similar to ILF, to the EFA, but this is more concentrating versus Europe into South America raw materials, and that is hanging in there at 2.1. So some pretty good trades there, and we'd like to add to them if we can. Again, it's too early for these the S&P and Nasdaq and small cap mutual funds that we're in, but they should be all green after today's close. So that's a positive sign. So a little bit of rebound in today's market. We also saw that last week. We're going to have to see where it brings us. And that's the market report. I want you to watch for AMD, GT, Microsoft, and JP Morgan. And of course, any questions, email me at info@twomeystocks.com. That's the number 2mestocks.com. I'll be happy to get right back to you. Getting a lot of inquiries because we're topping out some areas and bottoming them out in others. There is some sectors that have taken off, but they're way up, and we don't want to jump in at the last minute because the RSIs on those are nearing overbought. That's the Twomey Stock Market Report for Monday, the 23rd of January. Have a great day.